Good afternoon. I hope that the sound is on. I see that it's, well, I hope that it's working. Good afternoon. My name is Danny, and this is the live Q&A webinar. I would like us to go through a quick sound check because I'm not really sure if the sound is okay or not. Oh, okay. Thank you. Excellent. Thank you. Okay, then. So, like I said, this is the live Q&A. My name is Danny, and we are going to go through the nice structure of the webinar, okay, to see how the webinar is going to happen in every step. So to begin with, we're going to have, this is the agenda, we're going to have the previous questions that we received from our team. Could be common questions from other webinar, from previous live Q&A webinar, and so on. Then we have dynamic questions, which are this is the section where I'll be pasting the question that you're going to ask live on the webinar. As you can see, live Q&A. Okay, and eventually before that, we'll have a nice informative layer right here, okay, which I'm going to share with you these links to save you the time and the trouble to look for certain things on our website. And lastly, analysis, as it's written here, we can use examples, nice examples, and simulation of candles just to see how certain things works. Unless we're gonna get questions regarding analysis, and then obviously we'll cover it along the way. Okay. Any capital markets and trading information disclosed in this webinar is provided for informative purposes only. It should not be constructed or applied as an investment advice, a recommendation, or a suggestion. Okay, now I would like to say that the webinar is recorded, so even if there are certain things that wasn't fully understood on the first time, it's not a problem. You can just see the webinar again in your free time on our channel. Okay, in our YouTube channel, usually it's up to a day or two, but it could be even today. I just don't want to give any futile guarantees. Okay, I'm going to make sure that the webinar is recorded as I just mentioned a minute ago, and I'll be back and we will start. So I'll be right back. Thank you very much. Okay, so I believe everything looks okay and we can begin. We're going to begin, like I said, with the previous questions. Okay, as it's written here, we're going to go through the questions one by one, and we'll do our best to provide with the best answer. And let's begin. Okay, what is the best P&L? Oh, the best profit and loss ratio. I don't like this word, the best, because there is no best, right? We spoke about this many times before. There is no best. There could be a recommended one. There could be a certain range, and also this one, profit and loss, because maybe some people want to understand what is the best. No, what is the recommended profit and loss ratio? That looks much better. How to find a good entry point? Okay, decent. Why is gold so high? Anybody knows that? Anybody knows why gold so high? Is it high though? Let's see. I think it's still around the 2000 line. Yeah, oh, I spoke about it yesterday. Right. Okay. How many assets I should trade at the same time? Should I? Right? Yeah. Okay. Now, how is the interest rate affects currencies? This is a good question. All of those questions are pretty good questions. I'll be honest with you. Okay, let's hit the road. So this one, I'm not sure that to go through the questions by its linear order will be the finest way to go. I want to begin with something easy and then to leave the time for the questions that requires a little more a little more depths. Okay. So this one might take time. This one also takes time. This also takes time. This is fundamentals. This diversification is pretty easy. Okay, we can go through that and then the rest. Let's paste it in our lovely, oh, that didn't work for some reason. Let's try it this way. There we go. Okay, so how many assets? There is a definition for that. Diversification, guys. Now, first of all, why do I need more than a single? Oh, just before I carry on, right? Just so we can be on the same page. The platform that we're looking at here is called the Web Trader. And to enjoy that, you don't really need to download or install anything. You just log into AvaTrade.com. Yeah, you have it. Okay, if it doesn't look this way, you can just contact the customer service. Well, if you can see it, obviously the chat is not going to be an option, but you can just reach out through email to cs@avatrade.com and they'll fix it for you to look like that. Question here coming from Vincent. How do you work out your risk management to risk no more than 1% of a trade? That's a fine question, sir. Thank you. Excellent. Let me just get your question and paste it in the sorry, that's not here. Okay, lovely. Oh, I should add a question mark then. Perfect. Guys, feel free to do the same as Vincent. Maybe I didn't mention it in the beginning, but this is one of the best opportunities for you guys to get an answer on the screen about whatever question you just have. So you don't have to wait for me to ask you if you have a question. You can just write it down and I'll paste it down here. Okay, so as I said, this is the Web Trader. Now what we're going to do is we're going to play with the definition diversification to understand if it's useful and how it's useful and why do we need it in the first place. But I don't think I'm going to proceed with gold because we have a question about gold and I want to diverse with the assets that I'm showing you here today. Let's try and go with agriculture. Preet, you're asking where can I find a past session? Probably on YouTube. Very easily. Just gonna Google. You're just gonna search the Uncensored live Q&A session. Should be there with the rest of the webinars we're doing. Yeah. Now, I think I'm gonna show you today platinum. For some reason, we already have things on it as well. How convenient. Okay, let's keep it this way. Yeah, why not? Platinum is pretty good candidate. So how many assets I should trade? First of all, why do I need to trade more than one asset, right? Is there an obligation? Is it mandatory for me really to diverse? I want to trade platinum. Platinum is my bread and butter, right? I don't want to trade anything else, just platinum. Okay, never mind if I'm a beginner, intermediate, advanced, it doesn't really matter. Is it a good idea to stick with one good asset, or diversification is inevitable and at some point I'll have to diverse? What do you think? And if so, please write me a why, because just yes or no is not really an answer. Increase your chances. Okay, thank you, Mark. What do you mean by increase my chances, Mark? If you can shed some light. Kudala, you okay? So I minimize my risk. You're saying Mark is saying increasing my chances, and you're saying reduces my risk. So minimize my risk. So how is that? Let's understand. Diversification means, as an example, I'm gonna go with platinum at the same time, right? At the same time, it's written here. So let's say I want to trade platinum, I want to trade gold, I want to trade what else? Nasdaq and I don't know, Apple, let's say Tesla, right? Apple, I don't know, many things, Amazon, right? All kind of things. What else? Give me a name of an asset, any asset you want. Let's take a currency, right? Now, what is the difference? Let's suppose I only trade platinum, right? I have up and I have down, right? Thomas Kelly, you were asking what is the best time to buy Israeli bonds? Israeli bonds. Well, since those guys are in war now, I practically don't want to recommend anything specific, but it has its values. It has its values. You know what? Let me paste this question because first of all, so thank you. Right? That's pretty good. Gonna paste it down here. Oh, what did I do? Yeah, worked. So thank you, Thomas. Yeah, so let's understand this from the practical side as much as we can, right? So what's the difference? Let's suppose I trade only platinum. By the way, can I open more than a single position on platinum? Can I open more than one position on same asset? What do you think, guys? Yes or no? Yes, excellent. Let's proceed. Can I open, sell, and buy at the same time? Can I, guys? What do you think? Okay, Bobby, you don't think so. Why, if I may ask, why can't I do that? We're trading CFDs, contract for difference. Of course I can, and it's called hedging. Okay, now what is the advantage of trading more than a single asset? Let's say platinum and gold and yada yada. So what is the advantage? There is one major advantage, obviously, because there are two metals. One of them is safe haven, the other one can be companion. I don't really know how to describe it, but they can be correlated, right? Now, if I'm looking at this 7 assets, I'm sure they share something in common, right? Not all of them, but some of them, and that's enough. So it could save me time with analysis. And as it's written here, like Mark, increasing my chances. I don't know about increasing my chances, but I definitely split my risk. I definitely split my risk just because it's not a single asset. And that means that if platinum goes up and Apple, I don't know, Apple goes down, so I'm not relying on a single asset. That's actually the pure idea behind diversification. Okay, it's not mandatory, it's not obligatory, it's optional. It's optional, but the fact is that a lot of traders are doing it. Now, to the question itself, to the core of the question, how many assets should I trade at the same time, right? Who can recommend? Let's suppose that I'm your friend now, and you want to recommend me, Danny. Don't go more. Don't trade more than, I don't know, a number. What do you think is a good number to go with, not to exceed? Okay. What I like to do is obviously to begin from the extreme, right? Let's suppose I want to trade 50 assets. That's at the same time, again, at the same time. Is that good? Can I manage that? Right? My next question is, if not 50, what about 5? Can I go with 5? Is that enough? What do you think, guys? Diversification. It could be very effective, right? 3 to 5. Okay. Okay. Thank you, Sarah. So 3 to 5 from Sarah. Who else thinks that between 3 to 5 is fine? And who thinks 50? Why nobody say 50? What about 50 assets? Why not 50 assets? This way I increase my chances even more, right? Okay, let's proceed. So between 3 to 5. Now I would say as a recommendation, and again, I because of the, as you saw the disclosure in the beginning, I can't be too specific, but I would say that between 3 to 5 is pretty decent, right? But I took 50 as an example of an extreme diversification just to show you that 50 assets is obviously very, very demanding when it comes down to time. You need a lot of time to manage that. 5 is actually something that most of the people can find time to do. Again, it's not mandatory. So in this case, we're going to write down 3 to 5 as an example. Depending on how well the diversification can be managed over time. Okay, how is the interest rate? This actually goes along. That's the yin to the yang, right? We're gonna take both of those questions and we'll see what is the recommended. No, we don't want to go through that now. Actually, I can somehow get them both. Okay, let's try. So why is gold so high and how is the interest rate decision? That's actually, yeah, who knows why gold is so high? And let's understand what it means so high, right? Even though this question it's pretty amusing, but I guess it makes sense. Can I ask you a question, guys? Is Plata? Oh, sorry. Yeah, one thing about using the web trader, as you can see, I switched to gold. It's now showing me a gold. There is no doubt, but still, my execution tab is defined on platinum. So to switch that, I have to click sell or buy. Then it's going to summon the relevant tab. Okay. Sometimes I have to close and reopen. There we go. Now, my question was gold relatively to, just a second. Yeah, relatively this month. This month? Could be this month. Yeah. Is it high or low? Gold. Again, gold. Look where it's at right now. Look where it's been. I'm asking, is it high or no? Or low? High. Okay. Okay. Max, you're saying that it's high, but the question is relatively the time frame, right? If we go back to months, very, very high, right? Very high. Look where it's been 5 years ago, maybe 4 years ago, sorry. It was 1200, now it's 2000, right? It's actually the opposite, the first initials. Okay, but if we compare it to 3 weeks ago, 2034 to 2134, that's $100 down, right? It's 5% down. Okay, now, why is it so high? Can anybody tell me and shed some light? Why is gold so, first of all, let's understand what can drive, possibly what can drive gold so high. It's because it's high because of the uptrend. It's high because, well, yeah, you're correct, but the question is why the uptrend in the first place, not how it's gotten so high. Maybe that as well, but the question is what is driving gold to those levels? I'll give you a hint, right? How does the interest rate affect currencies and gold? And gold. What happens when the interest rate goes up? right? What do you think that happened then? What happens to the dollar? Loans, right? When the Federal Reserve increased the interest rate decision, when Powell spoke, uncertainty in the interest rate, yes, but the question is, if the rate is increased, naturally loans are now more expensive over time. It means that a payment of 1,000 will be multiplied by the time paying, right? And plus the addition. Now, if I'll take the $1,000 that I need to pay every month and I multiply that along the time and I add the addition that if the interest rate was increased, what do I receive? What do I receive? Higher payback. I have to pay higher payback, right? My payment is now more. It doesn't need to be necessarily from 1,000 to 2,000, right? But even if it's from 1,000 to 1,100, still it's quite significant impact, right? If somebody pays a mortgage for 20 years or for 30 years or God knows how long, right? It's quite considerable. Now, because I'm taking the whole sum, Now, it doesn't have to be mortgage specifically, but it means that other loans as well. Somebody needs to buy a vehicle, right? Somebody needs to buy a fridge. I don't know, some things, and you need to take a loan for that, right? So if you need to take a loan, but you know that now loans are more expensive, you're not necessarily going to do that. That means that you're going to buy less. What happens when people buy less? Or different interpretation, what happens when less people are using the when people less using the currencies, right? When they're using the currency less, when people using the currency less. What happens to the currency? Is it strengthening or is it's weakening? What happens with it? Now, there is a long-term and short-term effect. On the long run, when you increase the interest rate, it could stabilize the economy, and this is how the inflation was, I don't want to say prevented, but maintained, right? This is the word that people like so much, maintain. So if the interest rate was increased up to a level that disturb people not to purchase things and it prevents people from buying things, obviously it could affect the currency negatively. However, if the consumer price index stayed pretty stable, let's say as we expect it to stay, so the currency are not going to be affected this much. What happened in this case, I don't know if you guys saw the interest rate decision, that the decision stayed the same, right? If I'm not wrong. And then because the dollar got weaker, at least this is what people thought, so gold just reacted to that, but it went down, right? Now, if this was a drastic change in the economy and people get bankrupt and so on, like happened, I think 3 months ago, 4 months ago, I can't really remember exactly, but bank got bankrupt and people really couldn't handle such it was the 10th or the 11th time that the interest rate was increased, and then people really couldn't deal with it. Okay, but now it seems like it was stable. Was stable now? Okay. But the way that it works is the interest rate has significant impact on the economy and on currencies. Like I said, it's not necessarily that they increase and the dollar goes up. Okay, it could be vice versa. That depends on the economy and how the consumer, the population is handling it. Okay, and the banks, of course. Let's not forget the banks are also part of it as well. So interest rate decision, or I can say dollar was unstable. Okay, and how it affects the interest rate increase or decrease has direct effect on loans and other additional paybacks, which affects the economy, but I'm going to put here consumers. Okay, we're going to put this one under that question. Okay, we're just going to get this one a little smaller, I think. And we're going to get that under this question. Okay, what else we have here? How many assets? Okay, we already went through that, but it appears that, there we go. Can we get it? Okay. And actually this one, okay. So the two we have left with is what is the recommended profit and loss ratio and how to find a good entry point. Okay, let's play with the ratio and see how far we can get. What is the recommended? First of all, what exactly is the profit and loss ratio? Who asked me about the? Oh, it was Vincent, right? Vincent, you asked about the management, right? Okay, so we're gonna play with that and easily answer your question at the same time. At least I'm gonna try. So what is the recommended profit and loss ratio? So what exactly is the profit and loss ratio? Now I've wrote down some things to help you digest that idea of profit and loss. Okay, I'm sure whoever knows that, it's easy to comprehend, but for the people who don't, be a little dodgy. Okay, so every position has its profit, potential profit and loss. That means that I can lose and gain the same value if I'll take the same number of units over the same price difference. That means hypothetically I took 1 unit, 1 ounce of gold, because this is gold, and gold is measured with ounce. How many ounces in one lot? 100. Okay, if I look at 0.1, that will be 10. If it will be 0.01, it will stand for 1. Why am I showing you this? Because if it's been oil instead of gold, it would have been different. How so? Let me show you. So as we saw with gold, 1 lot was 100. But with oil, 1 lot is 1,000. And then 0.1 is 100. Then 0.01 is 10. Versus gold, that with gold we saw that when we take 0.01, it's just 1. And with oil, 1 is actually 10. Okay. Why is that important? because of what I'm going to show you now, right? The question was the recommended profit and loss ratio. Now, that means that if, for instance, I'm using this formula here, okay, let's say 1 unit, right? We said 1 unit. And I'm going to go for a buy, let's suppose. I'm going to go for $20 higher. So that means that the take profit, this is the now price. $20.36, and the price that we're aiming for is $20.56. That's $20 higher. So what I'm going to do is I'm going to click here on the take profit. You see the box here. What it does is it automatically triggers if it reached that price. It's going to close my position with the profit. That means that I'm going to change now the value to 56, 20.56. I'm going to see the $20 is my potential profit. Okay, let me be accurate about it. Okay, and I'm going to take the same laugh the other side. And then I'm going to see that the actual, why did I write a smaller value than this? Because we have the spread. The spread is the difference between the bid and the ask. Okay, the buy and the sell, buy and sell. Buy always will be higher than the sell, right? Now, as I was saying, $20 is my potential profit and loss. The reason is we're using the formula here. It's very easy. Look. Okay, very, very easy. The following step will be obviously, oh, I have it right here. Perfect. So this ratio is 1:1. The reason is it's quite self-explanatory, right? So I'm losing 20, I'm profiting 20, perfect. Now, what is the recommended ratio to work with? Is this the recommended ratio? Is this a good way to work with, or not? Or I should make 40. I should aim to make 40 and lose 20, or aim to make 100 and lose 5. How does that exactly? How does that work? And also, why must I do these things? Why can't I just trade regularly? Because of the question that we received from dear Vincent earlier, right? How do you work out your risk money management to risk no more than a certain percent in a trade? Now, how do we do that really? My balance is 10,000, right? Let's increase a little bit from 10 to 50, right? Just as an example. And that means now 5 multiplied 20 is 1,000, right? Oh, sorry. So I'm saying, oh, 50. Yeah, 50. Now my ratio stays the same. See, it stays the same. But what I'm going to do is I'm going to change either the take profit and the stop loss. Let's play with the take profit for now, because I also want to give the answer for Vincent to see how we can better manage our risk. Okay, the risk here, to understand, balance 10,000, potential loss 1,000. That means 1,000, well, subtracted from 10,000, that means 10% exposure. Let's suppose I want to minimize my risk from 10% to 5. That means what I'm going to do is I'm going to cut the lot size by half. But that's not an option because it will impact my profit. And in this case, I want to maintain my profit the same and just reduce my potential loss. So what I'm going to do is I'm going to reduce my stop loss. Well, I'm not going to reduce. I'm actually going to increase, because when I'm Oh, sorry, I'm buying. Yeah, so I'm gonna increase. I'm gonna get my stop loss, because when I'm buying, stop loss is lower and take profit is higher. How much higher? In this case, we're gonna look at it and we will see in a second. Let's suppose that this much. I'm not saying it's wise or not, okay? I'm not even getting into that now. I'm just explaining about the ratio, what I've been asked. And as you can see, just a sec. Oh, it went up a little bit. Let's reshape. There we go. Oh, something doesn't add up. This needs to be 7. There we go. This needs to be 7 as well. Okay, makes much more sense. But it keeps on climbing. I don't know if I feel like changing it now every now and then. Never mind. Let's pretend this is a round number and gold didn't climb as it is climbing. I just don't want to waste our time keep changing it, okay? And our ratio now is 1,500, right? Why? Because we can lose 500 and we can gain 1,000. That means that our ratio is now 1 to half, right? Or 1 to 2. That also could be. That means that I'm making 1,000 and potentially losing 1,000. 500, God forbid. Okay? To tell you, this is the recommended ratio, I have absolutely no idea. And I'll explain to you why. Because of this question. This question is about risk money management. And in my risk money management, I have 2 factors regarding my risk. I have my concluded. I don't want to confuse anyone, so I'm just going to simplify it a little bit. Count exposure and position exposure. Okay, what is the difference? What is the difference? Is that clear? Is that clear, guys? Vincent, do you understand what I've been doing here? Do you understand this explanation? Of course, Alicia. This is what I'm here for. This is what I'm here for, to teach you something new. If you didn't look at it this way, now you can. You see? It's useful. That means that I can think of a percentage, let's suppose, based on this question, right? Let's suppose that my whole account, I don't want to expose more than 5%. Okay? Now, if I'm looking at it with 5% max, and I don't want to lose more than 5%, and I insist on taking this position, what else can I do? I can do one of 2 things. I can lower the lot size to 25, and then it will have an impact on my potential profit, but I stay on the same ratio. Okay, or I can get the stop loss a little closer. Now, remember that the closer I'm getting my stop loss to my entry, the little less time space I have to maneuver with. Okay, if it's too close, I don't have a lot of space to fluctuate before it triggers. Okay, this needs to be understood. You don't want to push your stop loss to stand next to the entry too close, because if it gets triggered and moved to where you want it, it'd be very frustrating. Okay. So to that, how do you? So what I'm gonna do is I'm gonna write down. I measure my potential loss versus my balance, and I make sure my entire account. Well, look, that depends. If you do this exercise for a single position, that's fine, but you have to know that you have other positions on the account. If it's your only position, it shouldn't be a problem. but you should know that the potential loss needs to be spreaded for the whole account. Okay, so the factor that you choose, 5%, 2%, 10%, it doesn't really make a difference. Needs to be included via all of the positions and not just one. Okay, so I measure my potential loss versus my balance, and I make sure I don't exceed the percentage overall. Okay, that will be the account. Yeah, hope it's understood. Because it's a bit okay. All right. And regarding the ratio, I don't really know because it's not a defined formula. You see, if it's 1 to 2 and this way, it's fine. What about if I lost 20 positions, right? Let's suppose last year I took just a second. Let's suppose I took here a sell and it went up, it went up, it went up. I kept going with the sell with tiny positions, 0.1, sorry, 0.01, and, oh, sorry, needs to be 1. There we go. And the same way that I did with the example. Okay, so it went up, I lose 20, I lose 20, I lose 20, I lose 20, all the way up. And when I take the sell, eventually it falls down. But in this case, I don't take 1 unit, I take 100. Okay, so it falls down 100. I lost 20 positions. Just a second, about the ratio. Let's suppose losing 5 positions of 20, right? And sell, and eventually, so that's 0.01, and then making a profit from 2034, oh sorry, 22134, where it's been, that was here, right? And in this position, I took 1 lot. You know what will be the profit for that? Who knows what will be the profit for that? How much is 100 multiply 100, guys? Tell me if it's a good ratio. So this was concluded to 100, right? Loss. How much is that? That's 10,000, right? So for instance, I'm gonna go with execute when price hits. That lets me hypothetically sell from this price. If it gets to this price and I with the sell, oh sorry, and I with the sell, it's gonna trigger my sell. It's gonna initiate my sell here, and my potential profit can be where it's at right now. In this case, okay, execute when price hits. Let's set it 100, and you have it. Oh, there we go. Yeah, does this make sense? Does this make sense, guys? So the ratio, it's fine. It's fine to stabilize on a ratio. It's fine, but it could be questionable depending on the strategy and depending on the trading style. So it's important, but it's not. How can I say it? It's not to my personal opinion, it's not the core of a strategy. Could be. Okay, it depends. Yeah. Could be recommended. I don't really know. I don't want to say anything to confuse anyone. Depending on the strategy. and the risk money management. Okay. How do you find a good entry point? Okay, good entry point. So you see this what I showed here in this scenario when I hypothetically I wanted to sell here, let's suppose, right? Nobody knows if it's going to get there or how long it's going to take until it gets there, but let's suppose that it gets there in a month. Okay. How do I determine? You know what? Let's get rid of gold. I think we looked at gold for a while now. And what we really want to do is to how oil is doing. We already, no, we did not. Agriculture. What about wheat? Is it interesting? Just a second. Well, a bit gloomy, but yeah. Well, actually, this is an interesting one because of the question that we have. So the question is, oh, sorry, let me get rid of those and stick with the new one. Yeah. How to find a good entry point. So guys, what exactly is an entry point? Why is it important to find it, and how do we find it? Let's look at the picture we have right here, which wheat now sitting at 614.25. And let's suppose that I think that this is a okay. Let's suppose that we want to take a buy as an example, right? Keep in mind we're looking at weeks. Those are weeks. Let me change the crosshair here just to show you. I have to also to give you some piece of advice. You see that the crosshair is not pointing any candles. That is, it's not. It doesn't draw any information from the candles unless you're going to change it to the crosshair with the cross. Because you see, if I move my hand and it's not been followed by the cross, I know I'm not going to get any info. So I have to change it to the crosshair with the cross, and then it's going to show me this squarey bubble here with all of the information. And then I can confirm, you see that I'm looking at weeks. So each and every candle here on the chart will be weekly candle. So that means 7 days difference. You see this one is 20, this one is 20, 27th, 6th, 13th, 20th, and so on. If it would have been days, so each and every candle is a day. You see, this is over the weekend. This is why it's blanked. And yeah, let's suppose that I want to go with the wheat. You know what? Let's keep it for the daily, I think, for now. I think that for now, this could be the best of our. Yeah, let's keep it. Let's keep it for now. Let's keep it at the daily. Now, do you think that now is a good place to enter on a position? Whether if it's a buy or a sell, do you think that now is the time? I'm just going to place another horizontal line right here, another one right here. Yeah, what do you think? Is that a good place to buy or to sell? Come on, guys. Is this a good place to buy or sell? Not now. Okay. What do you mean by that, Lisa? Not now. You mean you would wait for a better price? To buy at the pink line, but there are 3 pinks line. Which pink line? $604. Okay, we're making progress. That's good. Why would I want to buy here and not here when it's green? Why would I want to buy here? Any reason? Any specific reason why I want to buy here? It's been there. Okay, Lewis, what do you mean it's been there? Okay, all right. So I'm gonna combine Lisa and Lewis what you said. So basically, the idea here is very simple. When I'm looking at this price, 604 could be one of the support lines. Okay, so if I'm gonna look at the chart a little wider, I can find there are lower points lower than that. But when I'm looking at the time frame that we are in right now, okay, let's suppose from here till roughly where we're in right now, this is the lowest point that I see. Okay, 604. Correct. Now, if I buy here, what is the right now? I'm looking at bullish. We have up, down, up, down. So I don't know exactly what will happen. What I do know that is if this is the support line and it couldn't break the support line, let's suppose hypothetically it gets to this price again, and I look at this engulfing candle, right? And then it's followed by a bullish one. What can I expect? Possibility for another bullish one, right? Obviously, it's not guaranteed. I can take a buy here and it will flinch down. Nobody knows that. But because it's been through that level before and there was retracement, there was reversal, then I can expect it to happen again. I'm not sure if it's going to go all the way from 604 to 629 or if it will go up at all. But when it regards to buying now or buying here, I think that here could be a better entry because of the reason that of what I've explained. Does this make sense? But you can buy here also. Yeah, I know. Thank you, Lisa. I can buy here also, but the question is if it's not if I can buy now or not. The question is, let's look at the question, how to find a good entry. Now, if I'm looking at the sell scenario, what do you think? Is this a good place to sell? No, I can use the same principle to look at the sell and I can decide I want to sell here, I want to sell here, I want to sell here in the middle. There are many reasons why not to take a position now and use something called execute when price hits. Okay, the biggest advantage is if it doesn't get to that price, it just doesn't trigger. Okay, so I can be ambitious and even set the position from here. Oh, sorry, it doesn't drag down. Oh, it does. Okay, or maybe to go even higher. Let's see if there is a reason for that. But it doesn't necessarily mean that it's a wise decision, right? But let's suppose I want to sell here. If it doesn't get to that price, nothing triggers. Simple as it gets, right? Can sell from here. Yeah, no problem. Anyway, the idea behind entry point is more into optimization. What you want to do is instead of just taking a reckless position now, not saying that taking now is reckless, but I'm saying as an option, if I can optimize my position, looking at support and resistance and other things that are a little more technical for us to looking at right now, then I can optimize my entry. And that's could be quite significant. Entry could be a big percentage of whether the position is going to succeed or not. Okay. Yeah, how to find a good entry. I can put down here examine support and resistance. Look at previous levels heavier and compare gold price. That means that the price that I'm looking for, I want to capture the left that I need between my entry to my gold price and see what's the best way to achieve it. That means that if, for instance, like we said, I want to buy in, just as an example, 604, and I want to grasp let's say $20 is an example. So $20 from here to here looks a bit ambitious, but 604 to 624, which is roughly here. Okay, it's something that happened during a day. Okay, it happened during a day. That didn't happen, that distance didn't happen during a day. It took much more than that, more than a week. Okay, I don't know if you see, but okay, 2 weekends, never mind. I don't want to go too far with that. What else we have? Oh, that's the last question. Okay, so before I answer that, I just want to share with you my links to save you the trouble to look for certain things on the website. I'm gonna share with you here the links for the okay. Now, first of all, I want to show you that you can get to the tutorials from here as well. You see here at the bottom there is this icon here, the tutorials. I click it, and I don't even have to click on the link, but save the link. It's good for you to have it. Then I have all kind of tutorials here. If I would click on the Academy, probably it's gonna throw me there. Login and deposit, pretty useful if you're still playing with a demo and you want to hit the road and start practicing really, so you can log in and deposit. This for additional information. The information that I was providing you here today was based on the questions that I received, but I'm sure that there could be many more things along the way that you want to get information about, and this is one of the best places to go to. Real account is again the same idea as this one. The Academy is something I don't have time to show because we have 2 minutes left. And I'm gonna give you one last thing before we say goodbye, and I will give a nutshell the answer about the Israeli bonds. I'm just gonna paste that one on the chat. Yes, okay. So the Q&A benefit special promotion code is going to grant you with one-on-one premium market review. Okay, enjoy that. Give it to your senior account manager and enjoy the market review. Could be extremely useful and, well, for free. Okay, now about the Israeli bonds. Look, I'll be honest with you. If you compare any other country that's been in a war, and Israel now is in a war, okay? Whoever watches the news knows that Israel is in a very serious situation, okay? And their bonds is something that you can check its value before the war, and obviously presently you can compare if it's relatively worth buying or not. Okay, that's what I would recommend. You can just Google it. You don't have to go too far. Google what the situation is and see the Israeli market and see what went down or up during and pre 7th of October when all this mess started, and see if it's worth investing. Yeah. So guys, unfortunately our time is up for today. I thank everybody who assisted me through the audience with the lovely questions about risk money management and the Israeli bonds. It was very refreshing, and of course to our team to put down all those nice questions. So I wish you all stay safe and make a lot of profits. And that's it. Have a good day. Have a profitable week.